Rockaway Hibner Memorial Church of God in Christ presents Chain Breakers, this and every Sunday at 9 a.m. here on WHYL.
From the L.B. Smith Ford Lincoln Studios, Oldies 102.9 is WHYL Carlisle.
It's time now for the Real Estate Radio Guy with real estate broker John Rainville. For the next hour, you'll learn everything about national real estate topics, trends, and news revolving around Central PA. It's sponsored by Equity Prime Mortgage, Enviroquest Inspections, and SearchHomesInPA.com. And now, here's the Real Estate Radio Guy, John Rainville.
Good morning, Central Pennsylvania. Hey, another beautiful day out there. If you want to make sure you get a chance to get out there, crisp air and just gorgeous sunrise this morning for those of you that are still tucked in bed, cuddling up, you know. Today we've got a really interesting show. If you know anybody that's thinking about buying a home in the next year, you really want to tune them in on today's show. We're going to be talking about different grant programs by different counties, for example, here in Pennsylvania, where you can get basically free money towards helping you buy a home. And that's money down towards your down payment and closing costs. In a typical closing cost environment, what would we be looking at? Let's say on a $100,000 home, Kingsley.
Well, this is, I think, where the misconception is in the market, which is why we have this radio show today. So you've got a few different options. We've all heard of, the regular conventional loan or conforming loan. You've got to put your 5% down typically, and there's variations to that where you can go with 3%. And normally that's reserved for people that have exceptional credit. At least that's what most people think. I've got to have perfect credit and a perfect job and everything else. You've also got your FHA programs, which are a little bit more credit forgiving. And of course, you have to put less down. It's only 3.5%. You also have, let's go with our 100% options. You've got USDA. VA. USDA, unfortunately, is reserved for typically rural areas. However, I think that's also a misconception. There's a lot of areas right here within our counties that easily qualify USDA, and you would think that it's considered suburban or even city for the most part. So USDA is certainly an option. You do need to have certain credit scores, obviously, to qualify for those types of loans. But with the USDA loan, you also have the added advantage, typically, of lower PMI rates. So
what's PMI for our listeners?
Oh, private mortgage insurance. So every loan, most loans that are out on the market today have an insurance, quote unquote, that ensure that you're going to pay for the mortgage. So basically it's the lender taking out insurance that you're going to pay. And most of these programs force this upon you if you do not have at least 20% equity. And recently, over the last few years, FHA has made a change where that mortgage insurance is paid through the life of the loan as long as you have that loan, even if you put 20% down. So, there's a lot of small, things you got to look at as far as what one loan may benefit from the other. But the big thing is, for today's point of view, is people think that they don't qualify for a home because A, they have no money, or B, they think they don't have the right credit. So, let's take a typical FHA loan. It's only 3.5% down. Well, on a $100,000 loan, you've got $3,500.
Right, plus your closing costs.
Right? So, most people are scared from the whole fact that, oh my God, well, how much are closing costs? Well, the government has their taxes, and you've got to set up escrow accounts. An escrow account is basically an account that you pay in your taxes monthly, and that way when the bill comes due at the end of the year, it can be paid for you. So all of that coming into qualifying for a loan scares a lot of first-time home buyers in particular because they haven't been through the process.
How much might that run? So the closing costs, 5 to 6% on top of that 3.5% down they're going to put down.
Typically. I mean, a lot of it really depends on the county you are and with taxes, because the taxes really is a bulk, your property taxes. You are, in essence, really going to be coming up with about 12 months of taxes between setting up an escrow account and paying a portion of the taxes on the property. So if you're in a high-tax area, maybe Cumberland Valley, and the taxes are $3,000 a month on a property, that's a lot of money. So that scares a lot of people. But what they don't realize is, especially just on a traditional FHA or conventional or even USDA loan, you're allowed to have gifts from immediate family members, right?
That'll help lower things.
So you can have really, a 6% gift from your father, an in-law, brother, sister, okay?
Not a friend, though.
Not a friend. Not a friend.
Okay.
No. Are they your cousin? I don't think you can prove that. But the point is between your mortgage lender and your realtor, a good realtor that's been versed in the industry and knows these things, it's worth the conversation to say, hey, am I qualified for this? Just because of little points like a gift, you can qualify for even the standard loans. Now, we get into conventional where you need 5%. You can still have a gift for conventional. Did you know that you can still be gifted or even given a seller's concession to avoid PMI? If you put 10% down, you're allowed to have more of a gift or seller's concession just because you put more down. So sometimes it's not always about having the minimum amount down as well, but there's certain ways that you can avoid PMI by just combining a couple of these programs.
That's why it's so important for you as a first-time buyer to be working with a good realtor and a good loan officer so that you can really have them help you structure your loan and your offer to keep your out-of-pocket to a minimum, yet maximize your benefit as far as keeping your payment low. Right?
Absolutely.
Well, a lot of the programs that we're going to be talking about today, they all have little nuances that you need to know about. Some of these programs will have income limits, and a lot of those will be tied to a county's median income, which is we can look up for you on the internet. Many have loan-to-value limits. Some want them to be an 80% down loan, but many will let you use a VA mortgage or USDA mortgage or FHA. Some of the grant programs, the nice thing with a grant is you may not have to pay it back. Some of these grants, which go up to $18,000 here in the state of Pennsylvania, you don't have to pay back. Now, there may be a time limit. You may have to stay in the property for 5 years, sometimes 10 years. Some of these are actually even then prorated in case you would get out early. Almost all of these programs, you will need to be a first-time home buyer. Now, what's a first-time home buyer? Believe it or not, you can not have owned a home just for the last 3 years, and you will qualify as a first-time home buyer. Now, we have one program that we're going to be talking about at the end of the show for veterans and Guard members, where actually if you've gone through a divorce or you've lost your home to a natural disaster or any type of disaster, you once again reset the clock and become considered a first-time home buyer and can use the program. So that's why you really need a realtor. There's so many different little things. Some of these programs, Dauphin County, Lancaster County, York, Cumberland, they all have classes that you're going to need to take to qualify for the grant. Then you actually end up getting a certificate. Some of the programs have reserve requirements. And what's a reserve requirement? They may want you to have an extra 2 months mortgage payments left over in your bank account after settlement, just so that they feel comfortable that you're going to be able to make the payment. And some of them actually even limit you on the maximum amount of assets that you can have altogether after settlement. And like I said, there are different types of loans that you can combine these with. Conventional, USD, DA, FHA, VA. The point here, folks, is you don't need to have 20% down. You don't need to have 10% down. You may literally be able to get in a home if we're able to package it up correctly for you, if we get some seller assistance towards your closing costs, and one of these grant programs, you may get in with $500 or less out of your own pocket. It really just depends on the program.
And the individual, yeah. But, yeah, these programs are amazing. I'm just going to go over one quick example,
okay,
if you will. A buyer calls up, has decent credit, not exceptional, not horrible, but enough to qualify for, a standard FHA loan. Not a whole lot of money, but, tax season's coming up. So this is a very important time of the year to, instead of maybe go out on a shopping spree, look to buy something maybe a little bit more, meaningful for your family. So where does $5,000? Most people are thinking, well, my tax return's not going to buy a home. But let's take Dauphin County assistance, for example. And we're going to use this $100,000 loan because this particular buyer actually was pretty close to $100,000 on this property. So they've got about $6,000 in the bank.
Good.
Which is good. But is that enough to cover closing costs and a down payment and anything else you need as far as appraisals and home inspections?
No, I would normally say about $10,000 if they were going to pay the whole thing.
And that would probably be a good, guesstimate just to keep, numbers round. So let's take this $6,000 that we have, and we're short about, what, $4,000 or $5,000?
Correct.
Okay. We'll round it up to 6 just for the fun of it. So you've got a good realtor, and I happen to know this realtor, and they're actually pretty good. When they go ahead and put this offer in on the home, they ask the seller, hey, we're going to buy your home, but instead of only paying you $90,000, we'll pay you $100,000, which is what we feel the value of the home is, but we're going to ask you to pay for some closing costs. And in this particular case, because it's FHA, they can pay up to $6,000, up to 6% of the purchase price towards closing costs. So that $5,000 gap or $6,000 gap that we thought we were missing, all of a sudden right there is already made up. Now let's take into account this wonderful Dauphin County Assistance Program. They will pay up to $3,000 towards your closing costs or down payment assistance. $3,000 doesn't sound like a lot, but now let's go back to this particular program that my buyers are actually enrolled in. It takes one little itty-bitty class. You go into, the office. There's offices, across the county. This particular one's in Harrisburg. You go in for a meeting. They basically educate you on the purchase, and by being educated, they then give you a certificate that says you're qualified for this grant. It's a $3,000 grant in this particular case. So let's take this scenario. Now we've got a buyer that has $6,000. It needs 10 or 11. They're given $6,000 from the seller to pay for their closing costs. Now let's toss in $3,000 from Dauphin County. Now all of a sudden, we're buying a home with what? $2,000 out of our pocket? And they were worried because they weren't going to even have enough, and now they're going to be walking into the home and still have $4,000 left in their pocket for the what-if fund or the reserve fund that you were talking about, and they've got a new home. I mean, we can go over the benefits of home ownership versus renting all day long, but there's a bazillion.
These workshops don't cost you any money either. They're really set up to make you as a buyer understand more about the mortgage process, home maintenance, saving for future repairs such as a roof, things that wear out on a home over the course of time. These courses are offered all the time. You do have to get an appointment to get in there.
Yes, typically, you can set them up usually about I want to say a week at most. I think it was 2 weeks ahead of schedule. A lot of times these classes will have multiple people in the class. Sometimes they don't. I mean, you can set up appointments to have, one-on-one in some circumstances. But it really is easy.
So there in Dauphin County, then, you're actually issued a certificate that's good for a certain amount of time, and you're able to use that to buy a home anywhere in the county. You don't have to buy in Harrisburg City or Hershey or anywhere. You're allowed to buy anywhere within that county.
Mm-hmm. Yeah, and I'm actually excited to have one of the representatives from the Dauphin County Assistance Program, unfortunately on vacation now, but has agreed to come on our show in the coming future. And we can obviously dig into that program in depth coming up into the future for those, that don't want to take the time and simply look online or call your realtor to get some more information. And it really is not hard, folks. I was reading a couple of articles about these programs over the last week, with our show coming up. And some of the statistics are mind-blowing. 87% of all the homes on the market qualify for these programs. One of these programs.
And if you're lower income, did you know in Dauphin County you can get an extra $2,000. You can get up to $5,000 if you're lower income.
And what's lower income?
Well, lower income would be below 80% of the median income. So that for a family of two, that's going to put us under $46,000.
Okay, so $46,000, $100,000 home. That doesn't seem out of the realm of possibilities. Actually, it seems likely. $46,000 median income, somebody that's actually smart with their money, that doesn't go out and buy, a brand new Mercedes of $100,000 on that salary, can easily afford, $140,000 house. If they fall within those guidelines, obviously I would say a $140,000 house is going to fall under the median as far as home sales as well. So go back to our simple example.
Package it up with USDA or an FHA mortgage.
Well, even with an FHA, we throw in an extra $2,000, and what did we just buy this house for? Nothing out of our pocket.
Right. Something to bear in mind, if you've never owned a home, is mortgages are paid the opposite of rent. When you pay December's rent, that's for living in the apartment or the rental for the month of December. When you make December's mortgage payment, conversely, that was for November. So a lot of times when you buy a home and we settle, let's say, before Christmas, your first mortgage payment may not be due, most times won't be due until February 1st, correct?
Yeah, most times it does skip a month. So, typically, let's say you close on the 15th of December, your first mortgage payment would be February 1st. So, in essence, part of your closing costs, if you will, that 15 days of interest is actually paid at the time of closing. So you really are paying for the month of November already, but then once you get to February 1st, at that point you are now paying for January's month.
Excellent. Well, we're going to head to break, and we're going to go over more of these specific programs when we come back.
Buying or selling a home? For professional home inspection, call Enviroquest of Harrisburg. Their certified home inspectors will conduct a thorough inspection and provide a detailed report with many pictures. They'll explain the findings. Do you have elevated radon levels in your house? Call Enviroquest. They have fixed over 10,000 homes over the last 25 years. For a professional home inspection or radon mitigation, call Enviroquest at 233-6144, 233-6144, or visit Enviroquest online at evqharrisburg.com. That's evqharrisburg.com. Searching for a home online morning, noon, and night, looking at website after website, clicking contact me and nobody does? Missed homes that were sold before you knew they were for sale? The better choice is searchhomesinpa.com. Search if you want, or they'll do it for you. Contact by phone, email, or text to adjust your search or to tour a property. Start online. They'll call you back at searchhomesinpa.com or call toll free 855-919-HOME and they'll do it for you. Searchhomesinpa.com 855-919-4663.
Hi, this is Kingsley Harmer with Equity Prime Mortgage. Equity Prime is excited to announce its grand opening here in Central PA. Equity Prime Mortgage is an aggressive, direct lender licensed in 45 states and D.C. Join me as we discuss different topics such as qualifying, budgeting, and savings, and find out why we are able to offer better rates and qualify more clients. Equity Prime is currently hiring experienced loan officers in the Central PA area. If you feel you are qualified, please call 717-200-4800.
Well, we're back, and I need to make a correction because I shuffled my papers up here this morning, and actually that $5,000 figure is good for Cumberland County, not for Dauphin County. And Dauphin County's money, I just want to end up with some finished out Dauphin County. Dauphin County, you must repay that $3,000 when the home is sold. You make no payments on that grant money or loan money while you own the property, but when you do sell it, you are going to repay them.
Which isn't a bad thing. I mean, at the end of the day, you're utilizing this to get into a home of your own.
Correct. And, okay, so we're going to go over now on to Cumberland County's program. Cumberland will obviously give you $3,000 if you're in that 80 to 100% of the median income. So that's based on family size. The more people you have, more kids, the more income you're allowed to have. They do cap you, Kingsley, that the most seller assistance, gift funds, and lender assistance that can be is $15,000. And you, after settlement, the buyer's only allowed to have up to $30,000 left over in their accounts. Now, that does not include your retirement money. Question for you, Kingsley, is if someone needed to, with utilizing these programs, if we could only get the seller to pay, a limited amount of the closing costs, is it possible to do a lender-funded credit also in order to help the buyer come into the situation with a little bit less money?
Absolutely. And there's actually a lot of programs out there that are advertised, in my opinion, a little, let's just say they advertise them as if they're gifting you money. But be careful with, just blindly accepting these advertised programs. However, they are made for this particular purpose in mind. They have loans and refinance loans, and they say, oh, no closing costs. And in a lot of cases, that is true. Typically what ends up happening is the lender will issue a slightly higher rate than if you were, a perfect candidate with 20% down, 800 credit scores, etc. A slightly higher rate, and what happens is there's what's called a rebate on the back end of that interest. So it's, in essence, really prepaid interest that you're taking out of the loan, in an essence, and the lender is crediting that back towards your closing. So in a $100,000 scenario, let's say, for example, there's a 1 percentage point lender credit because you have a slightly higher rate. So, today's rates are bouncing all over the place, but, let's take 4.25%, which, was yesterday's, standard rate. Let's say you ended up getting 4.375 instead of 4.25%. That 4.375 creates that lender credit in the back to say, okay, look, we're going to go ahead and pay for part of these closing costs because we can see you're tight. So in that particular case, yes. I mean, you can, go up to $3,000 and even more in some circumstances for the bigger loan amounts But if you couple that together with a Dauphin or Cumberland County program, grant money, loan money, again, you could literally get into these homes with as little as $500 and in some cases nothing out of your pocket.
I want to remind our listeners, if you have any questions today and you'd like to call in, our number is 717-249-1787. We're going to be talking with John Staz here further down the road, but other than that, we're trying to keep our lines open in case you would like to call in on a specific question on any of these programs or how you may be able to help. We may be able to help you get into a home, because it really does not take, folks, as much cash as what most people believe to get into a home. A lot of rentals I see anymore, they want first month, last month, and a security deposit. So if you're renting at $1,500 a month, there's $4,500. Kingsley and I, we're going to put you in a home. I mean, we can definitely get you in a home with one of these programs if you have, fair to decent credit.
And $1,500 a month is a pretty nice home.
Oh, absolutely.
I mean, there's a lot of, we've had on our show, there's a lot of new builds, I think, for $1,500 a month that we could get you into.
Absolutely. On the Cumberland County program, that is a forgivable program. So what they do over a 5-year period, every month, they actually forgive 1/60th of the loan. So the only thing you have to do is, after that 60th month, you have to pay for the satisfaction piece at the prothonotari's office. So it's going to cost you $15 to $25 to get that removed off of the records.
For $5,000, up to $5,000.
Well, yeah, for up to $5,000. I mean, that's the deal of the day.
$25, 5 years from now. Yeah, I think I could invest in that. Being that I have to put nothing into it to invest into it.
Yeah, free money. Yeah, free money for $25.
Free money, home ownership for the 5 years, and I'm certainly not an accountant, but there's when you factor in the benefits of home ownership and the tax advantages that you have, let alone not having, neighbors pounding on your wall next to you, at 12 o'clock or dancing around at 2 o'clock in the morning. What more could you possibly ask for here? I mean, the programs that are out there, people, is a gift. And when I say a gift, it's a gift. This is they want you to own a home. And what's sad is, first-time home ownership right now is actually down to an all-time low since like the mid-'80s. Only 33% of the market is made up of first-time home buyers. With all of these programs designed for you to go out and get a home, come on.
Well, with that, let me go over some more of these programs. Lancaster County goes up to $5,000. It's a 0% interest loan, so no monthly payments. Okay, but they do want the home to meet minimum FHA requirements. So they're looking for the home to be in a decent state of repair. They don't want you getting into a potential money pit. So you do need to also take a course with that, and you need to do that before you sign your sales agreement. So that's why it's important to tag up with your realtor, tag up with the loan officer, so that we can make sure that you're guided and get the classes out of the way and fill out the application, have it all ready to go for once we get you that contract on your new home, that you're ready to send that information in. The next one we're going to do is Adams County. Adams County has a unique program also. You do have to take the classes for Adams County, and they do give up to $7,000. Okay, but it is a low interest loan. You do have to now this one you actually have to make monthly payments on. So in Adams County, folks, you would have to make payments, but to give you an example, if you're in the low income category for the $7,000, it's going to be less than $68 a month. If you're in the low category, about $64 a month. So that's where their income breaks are in Adams County, is under $59,000 they consider to be low, and under $37 very low. So with a moderate income, it's only a $65 a month payment. So these are bargain ways to help you get in the house.
And we keep kind of like just sliding over these seller assists. But a seller assist, any good realtor that's been in the industry knows that in conjunction with these programs, and in a lot of cases, you don't even need the programs. It's kind of like icing on the cake, but the programs and the seller's assists are there to minimize your out-of-pocket. So you get the seller assist, and let's take, for example, Adams County, and you've got a $200,000 property. Well, a standard FHA loan is 6% seller assist, allowable. That's $12,000. That's a lot of money.
Wonderful.
So, that $12,000 all of a sudden with your taxes and closing costs and home inspections and appraisals, it seems real doable now, doesn't it?
It does, and you really have to look into this, folks, because every area is a little bit different. For example, down in York, they do have a program where they actually give you more money if you're buying in the city and a little bit less if you're buying outside the city in the county. Down there, for example, in York, they'll go up to $7,000 if you're buying a city home. Up to 2% of the purchase price of the home, they'll help contribute towards your down payment.
And I think the real education here today is to not only know that it's doable in most situations, but just reach out to one of us. Reach out to a realtor. Reach out to your loan officer. Give us a call today. I mean, if you've got a question, no matter how off the wall you think it is, call in and ask us. 249-1787. Again, that's 249-1787. But I go back to this because it's such a doable thing these days. Just call up and ask. That's what we have, all these papers that we can shuffle back and forth. There's that many programs out there that we can literally package one up for you to buy a home. In a lot of situations, even if you don't think you have enough money. I mean, I've got people right now that are calling to qualify me like, hey, I'm going to get my tax return coming up. I don't have much in the bank, but I am getting $6,000 from my tax return. I don't think it's enough, but do you think we could afford a home? Well, yeah. I mean, we just demonstrated $6,000, and they really only needed maybe $2,000, and they still have this money in the bank to maybe, spruce up the place. And just to kind of give you just an idea of how many programs that are out there, there's a program in York County called TAP. And what that does, this is, again, just icing on the cake. They want you to buy in the city to the point where you can buy a house that's, maybe needs a little love, a little fixing up. We go back to our program, a week or two ago about 203K loans. But this TAP program will allow you to lock in the value of your home for tax purposes before you renovate the property for up to 10 years. So for 10 years, you own this home. Let's say you got it at a bargain basement deal at $50,000. And, that assessment is $50,000, and you're going to come in and you're going to renovate this place and bring it back to its, grandeur of old. Now it's worth $125,000. But you can lock into a program and pay taxes on just the $50,000.
Folks, it really takes very little money to get into your first home by combining it with some of these packages. I know there are a lot of people out there, that have just gotten married, and if you didn't spend all that cash that you got from the chicken dance, there's money that you can actually put in to buy a home. And ask mom and dad, say, hey, don't get me anything for Christmas. Can you help us out, give us $500 so we can go out there and buy a home? There's a lot of places that you can get it. If you didn't have the bare minimum that you can get and you had a 401k, right, they would be able to pull some money from their 401k too, towards buying a home. I mean, we can definitely help you come up with the cash to get in a new home.
Oh, absolutely. Absolutely. And what I love about this, and I'm just going to hammer down this point that I just brought up a second ago. A lot of these people that are maybe paying lower rents, like $750 or $850 a month, and they're in, these small dinky apartments in the middle of nowhere, that think they can't afford a home because, oh my God, they're $150,000, $100,000. It's out of my price range. I want people to understand that this is available to people of all income levels. And we go back again to our instead of calling it a 203K, let's call it, a renovation program, because that's where you've got these great HUD deals that are out on the market, let's say for $50,000 in an area that needs some work. But
so you put $25,000, $30,000 into it.
But you use the mortgage program that's out there,
right,
to roll it into that. Now you've got a house that's worth $100,000 that you only paid $75,000 for, because you're gaining this equity. Take that in conjunction with down payment assistance program. I mean, come on.
Some of these programs, Lebanon has a very unique program. One of the things that they require is a home inspection. We would still highly recommend anyone get a home inspection, because you don't want to get into the money pit, or let's say that the furnace is bad. You want to be able to have your realtor be able to ask them to replace the furnace going in.
Oh, yeah, that's part of the negotiation as well. It doesn't have to just be about the price.
Right, and that's not considered a seller concession, right?
No, that's prior to.
Kingsley, can they count the home inspection money towards their down payment and closing costs? Can that be put in that figure?
Well, typically when you get an estimate for loan closing costs, most people will include that in the closing costs, but it's paid outside of closing. So it's not something paid in conjunction with the loan.
Is that allowed, though, to go, like, let's say they were using a FHA loan, would that be able to be counted towards their 3.5% cash in?
I would imagine it would be, with a copy of a receipt when you go into title or escrow. Whether or not we would have to call up, each particular county to see if that was an issue. But from a mortgage standpoint, it is a closing cost. Just like an appraisal, you don't pay the mortgage company for the appraisal. It's paid outside of closing. So you as a buyer are paying, the appraiser to do that, but it's still a closing cost. So yes, if you're getting a concession towards that, literally speaking, what would happen is it would just come off of what's still available or still on the table as far as costs.
We're going to go to a quick break, and then we're going to come back with John Staz. If you have any questions, call us 249-1787. Hi, my name is John Rainville, Pennsylvania, Maryland, and New York real estate broker and realtor. I'm your host for Real Estate Radio Guy. Our show is dedicated to local, state, and national real estate topics, trends, and news revolving around central Pennsylvania. We'll discuss the buying and selling process, mortgages, market conditions, property maintenance, commercial and investment real estate, and more. Real Estate Radio Guy is sponsored by Equity Prime Mortgage, Enviroquest Inspections, and SearchHomesInPA.com. Join us every Saturday morning from 8 to 9 on WHYL.
Buying or selling a home?
Hi, my name is John Rainville, Pennsylvania, Maryland, and New York real estate broker and realtor. I'm your host for Real Estate Radio Guy. Our show is dedicated to local, state, and national real estate topics, trends, and news revolving around central Pennsylvania. We'll discuss the buying and selling process, mortgages, market conditions, property maintenance, commercial and investment real estate, and more. Real Estate Radio Guy is sponsored by Equity Prime Mortgage, Enviroquest Inspections, and SearchHomesInPA.com. Join us every Saturday morning from from 8 to 9 on WHYL.
Searching for a home online morning, noon, and night, looking at website after website, clicking contact me and nobody does. Missed homes that were sold before you knew they were for sale? The better choice is searchhomesinpa.com. Search if you want, or they'll do it for you. Contact by phone, email, or text to adjust your search or to tour a property. Start online. They'll call you back at searchhomesinpa.com or call toll free 855-919-HOME and they'll do it for you. Searchhomesinpa.com 855-919-4663.
Hi, my name is John Rainville, Pennsylvania, Maryland, and New York real estate broker and realtor. I'm your host for Real Estate Radio Guy. Our show is dedicated to local, state, and national real estate topics, trends, and news revolving around central Pennsylvania. We'll discuss the buying and selling process, mortgages, market conditions, property maintenance, commercial and investment real estate, and more. Real Estate Radio Guy is sponsored by Equity Prime Mortgage, Enviroquest Inspections, and SearchHomesInPA.com. Join us every Saturday morning from 8 to 9 on WHYL.
Hi, this is Kingsley Harmer with Equity Prime Mortgage. Equity Prime is excited to announce its grand opening here in Central PA. Equity Prime Mortgage is an aggressive, direct lender licensed in 45 states and D.C. Join me as we discuss different topics such as qualifying, budgeting, and savings, and find out why we are able to offer better rates and qualify more clients. Equity Prime is currently hiring experienced loan officers in the Central PA area. If you feel you are qualified, please call 717-200-4800.
Good morning. We're going to be talking with John Staz from Enviroquest Inspections. John, how are you doing this morning?
Good morning.
Good morning. It's another beautiful day out there, a little brisk, but it's a fantastic day out there. I know you've probably heard some of us on the show here. We were talking a lot about how a home buyer can get in with very limited money using a lot of these programs. I do know that a lot of our first-time home buyers sort of get a little bit scared sometimes when, you guys are out there, the home inspector's out there, and you say, hey, folks, that's a 50-year-old furnace. You really might want to ask the seller to have that replaced, right?
Yeah, a lot of times with the first-time buyers, they're looking at a house that's, maybe at the maximum of their budget or what they can afford, and the situation is more sensitive to major things such as a furnace or roof that needs replaced. Right.
So, but a lot of times, the young buyers, for example, will, you guys go through and you point out any major deficiencies. So that's one of their protections. And then if that house, John, say it's a 50-year-old house and it's got that big old monster oil furnace in it, that same house then with a brand new gas furnace is superior to the one they looked at, right?
Yeah, a lot of these things, you go from house to house on the same street, and it can have a lot of differences that make one superior over the other. Yeah, of course, with the newer appliance, usually the general rule with a furnace is if it's 15 years old or more, it makes sense just to replace it based on the efficiency alone. So you can operational cost efficiencies by replacing an old furnace, pay for itself in a short period of time.
Because a lot of these things have like a normal design life. So a lot of it where when you haven't owned a home, you don't sometimes understand that it's just like your tires on your car. They're wearing out, and you really need to sort of budget for that preventative maintenance. But if you're buying the home now and you can ask the seller, for example, to put on a new roof or, upgrade the furnace or the central air or something, that would be to their advantage, right?
Well, certainly. And, things such as another thing to look at is during the home inspection process, when these come up, if it's a surprise to everybody, it can be more damaging to the situation. A lot of times it's a psychological factor. By the time we find that deficiency, the buyer can get, if it's replaced before the house is marketed, things like that, it can be a lot better. Sometimes even if the seller's willing to replace it, it can be a psychological factor of finding this major problem.
John, what are
people
some
have me? Go ahead.
What are some of the big ticket items that you see out there? Because, for a first-time home buyer, they don't know what a furnace costs or a roof costs. But just can you give them some ideas so that they can get a better feel for what the advantage is to them to have that fixed now when they buy the home?
Well, let's say a roof system. Of course, if a roof is nearing the end of its life, you don't know when it's going to fail. You can go chronologically or if there's signs of failure. But, a lot of times a roof, depending on the size of the house, $10,000, it's probably like an average cost for the average size house. Of course, as you get into bigger houses, that dollar figure goes up. A furnace, $3,000 to $6,000, of course, depending on the type, the size of the house. Even double that. $5,000 to $15,000 if you're talking about replacing ductwork or adding a system that's not there, such as you have a water-based system and you want to put a duct-based system in, so it can get pretty costly.
So, and I know, John, you do inspection. Your company does inspections in all the local areas here: Cumberland, Dauphin, York, Lancaster. And if the people want to reach out to you to order an inspection, what's the best number to reach you at?
The number's 233-6144, or the website evqharrisburg.com.
And, John, you guys are posting, I know, blogs up on even your Facebook site now, right? Just about every week.
Yeah, we're putting up blogs on a regular basis, and the Facebook page, we're on Facebook, and, of course, on our website as well.
Hey, I have an interesting question because we're talking about new home buyers, and there's this I don't want to say misconception, but people are thinking that a home warranty replaces an inspection. What are your thoughts on that?
Well, home warranties, they certainly have their place in the whole system of buying and selling homes. The thing I would advise people on is read the fine print and make sure that the warranty is suitable. For example, if you're buying a huge house that has 3 heat pumps and it says it'll give you $1,000 towards a heat pump repair, that's not going to be the right fit. What I would say is, if something's found in the home inspection, then, it's not really a good thing to get a warranty to fix that because it's already been disclosed. And, I think a lot of the warranty companies are getting smart to replacing things that have already been disclosed in an inspection. So they're sending people out to look to make sure that, to try to get an assessment of whether the item failed, before the home inspection or after the home inspection. So, I would advise against, something that's already been disclosed to you, trying to get a warranty to cover that.
So you're not saying that we should either A, get a warranty, or B, get a home inspection. I mean, in essence, no matter what, if anything, for your own knowledge and for your own protection, you should at least get that home inspection to know what you're up against, to even know if maybe... So if I get a home inspection and you say, great, well, the furnace is 10 years old, it might have 5 years of life left in it, the roof's got maybe 5 to 7 years left in its life, and then I go ahead and get a home warranty on top of that, because, the home has some age, has a few issues. Be careful with the writing in the home warranty that you get, is what you're saying, because it might not cover some of those issues that you pointed out in a home inspection.
That's correct. In a lot of the warranties, as far as roofing, I don't know of too many that cover roofing. I know some of them will cover the roof boots, which that's a small percentage of the total roof cost. Leaking roof boot, a couple $100 to fix that. So if you're getting a home warranty thinking that it's going to cover your roof, it's usually not the case. I don't know of too many that do cover the roof. Maybe there are that I don't know about, but So yeah, you want to read the fine print to make sure that what you're buying the warranty for is going to be covered in the event of some sort of mechanical or system failure at the house.
All right. So in essence, everybody just get the home inspection. I mean, at the end of the day, you want to know what your home is doing. I mean, that's what a home inspector looks for. I mean, you're going to see things that the average Joe is just not going to see. And I would rather know now if I'm going to have an issue versus just, roll the dice and hope that my warranty covers it. Otherwise, some of those big ticket items could be rolling out of your pocket, and you easily could have prevented it, ahead of time.
Yeah, and another item with the home inspection is just for your own peace of mind. A lot of times you spend half an hour at the house or 45 minutes, and then you put an offer in. The home inspection is a time when the buyer can spend a couple hours there with the inspector. Inspector shows them areas of the house that they may not have seen during the initial visit to the house, and we can educate the buyer on their systems, what they have there, and just gives them some peace of mind, a couple hours to really look closely at everything. It is a major purchase, so it's a nice process of educating the buyer about what they have there and showing them things that they might not have seen at the initial viewing.
Well, that's definitely a lot of good information. I mean, at the end of the day, this is a big purchase. This isn't like purchasing a used car for $1,200. When a furnace is going to cost you upwards of $15,000, that's certainly something I would want to know before going in. And having the right inspector, go through the home with a fine-tooth comb to let you know that. And then number two, make sure you have the right realtor. You don't want your cousin that does it on the side, to be putting an offer in for you. This is where you need somebody that's going to be more of a bulldog in a politically correct kind of way to get you everything that you should out of this home. I mean, it's part of the negotiation process. So if you've got a furnace that's going to go bad in 3 years, that's going to be on you folks. I mean, that's a cost that you're going to have to figure out what you're going to do with it. Either take care of it now in the negotiation phase, whether it's that or a home warranty, maybe an extended home warranty in that particular case. Make sure you read the fine print, as John says. Or, hey, I mean, if you're okay with just paying for a new furnace or switching it over on your own, but keep in mind that's just a cost that you're going to have to bear. So do your homework, get the inspection, possibly get the warranty if it makes sense, and have the negotiations done by somebody that's seasoned. Is all I can say.
Well, that warranty, they could actually put that in there, ask the seller to pay for the home warranty, possibly, as part of their closing costs.
And a lot of people do that. And a lot of people, I think, do that just as a selling point to sell their home. Hey, when you buy my house, I'm so happy with my home. It's so perfect. I'm going to give you a home warranty.
Even better yet.
Absolutely.
Yeah, and with these warranties, I know some of the products that are available will have a dual phase where during the listing period the warranty is in place, and then it switches to the buyer at settlement. I'm sure they're a little more expensive, but I know they are available as well. So the seller's covered during the listing period, and then at transfer, it transfers to the buyer. So.
Well, there's definitely a lot of good information. Hey, John, we want to thank you for coming on, as usual. A lot of good information. Once again, just shoot our customers with your phone number, the best contact to get a hold of you to get a warranty.
Sure. Yeah, the phone number is 717-233-6144, and then the website, evqharrisburg.com.
Thanks, John.
Thank you.
Okay, so we're going to go right on with an exciting program I came across this week. It's called Dream Makers, folks. And this is a program that any veteran, currently in the military, or Guard member, for example, can use to get grant money. Now, I know you can get 100% VA mortgage, but it still takes some cash to get into the home. You still have closing costs, so if the seller won't pay all of your closing costs, you're still going to need a little bit of help. But this Dream Makers program will give a grant to a veteran or a Guard member, past or present, up to $5,000. Now, they do it as a matching amount, and they did just change it. It had been 3-to-1, now it's 2-to-1. So if you have $2,500 of your own money, they're going to match that, and they're going to give you up to the $5,000 towards your down payment and closing costs.
So if I have $5,000, what you're saying is they'll give me $5,000.
Well, it's 2-to-1, so you need $2,500 to get $5,000.
Okay. So if I have 5, they're still going to give me only 5.
That's correct. They're going to cap you there. Now, what's interesting on this one is, again, if you've lost your home through divorce or a natural disaster, they're going to reset the clock, and they're going to count you as a first-time home buyer again. Not that happens to any of our military people. It seems to be, 50% of marriages end in divorce. So a lot of them could now reset the clock with this and, package it up, grant money.
Let's not use that as a sales technique to try and get divorced. But, so, all right, so with a VA loan, since we're talking about veterans, my question to you then, John, with this program, if I've got, let's say, $5,000 in closing costs only, I've got $5,000 in my pocket or in my bank that I could use towards this, do I actually have to spend that $2,500 at close to get the $5,000, or do I just have to show that I have it available for them to put it in? And the reason I ask, as a lender, every VA loan has what's called a VA funding fee. Those VA funding fees typically get tapped on top of a mortgage. But a seller is allowed to concede towards a funding fee.
Correct.
So if a seller is going to give you a seller's assist,
right,
and you've got this DreamWorks program, we could possibly get into this home. Of course, we're doing 100% loan, but why would we want to get the home with a VA funding fee on top if we can eliminate it?
Correct.
And have our closing costs at least mostly paid for?
Well, you have to put the money in, so it's got to be cash in. So it does have to be a hard contribution. Where I can see this coming into play is a lot of times we're in a really good area. Most of the sellers around here will, contribute if they can up to the 6% towards your closing costs for a veteran. But if they're tight and they can't do that and they can only do a portion, this is a way for a listing agent, for a seller to help make up the difference. So that's pretty much our show for this week.
A lot of information. And at the end of the day, there is a lot of different paths you can take to home ownership. So call myself, call John, call your realtor, call your lender. Of course, we're the experts in the field. So if you want to get up to $18,000 towards your home in Lackawanna County.
Correct.
We're the people to call that can point you in the right direction. We'll package it up right. We'll get you in a home. Hey, I don't know what else I can tell them, John. I think we had a great show. Next week we'll be back.
Been listening to the Real Estate Radio Guy with real estate broker John Rainville. Listen each week at this time and learn all about buying and selling, mortgages, market conditions, property maintenance, and much more. It's brought to you by Equity Prime Mortgage, Enviroquest Inspections, and SearchHomesInPA.com. It's the Real Estate Radio Guy, Saturday mornings at 8 on Oldies 102.9 and AM 960 WHYL.
From the L.B. Smith Ford Lincoln Studios, Oldies 102.9 is WHYL Carlisle.
Joe, Ricky, Bryce, good time oldies. WHYL.